Trump appears to be showing concession. He softened his tone and stance on Beijing, suggesting a future deal would significantly reduce tariff. A senior White House official stated China's tariff may be reduced to around 50 to 65%. The administration plans a tiered tariff system based on national security threat level. Higher threat items will be facing higher tariffs, lower threat items will be facing lower tariffs. Trump also walked back his earlier aggressive comment about firing Federal Reserve Chairman Jerome Powell. Previously, he had stated on social media that Powell's termination cannot come fast enough. Now Trump is saying that he never had the intention to fire Powell. Trump was likely made aware that now is not the time to challenge the US dollar's reserve currency status. Unfortunately, Trump's flip-flopping and ad hoc policy decisions has already undermined the credibility of US government. It's hard for people to take his words seriously, though a few around him like Treasury Secretary Bessent still remain credible. But Wall Street likely has already priced this in because this is not his first term. One of the largest hedge fund, Citadel founder Ken Griffin, criticized Trump's trade war, said it derailed business investment plans for the next 4 years, warning U.S. is damaging its global brand with tariff policies. He called tariffs potentially counterproductive. Policy instability discourages manufacturing growth in U.S., said volatility undermines Trump's own economic goals. So he's saying that the government is no longer seen as credible. So what's causing Trump's sudden concession to Beijing and Jerome Powell? Many believe China's ban on rare earth mineral export to the US is driving the US concession. Rare earth minerals are critical for things such as military equipment, consumer electronics, and electric vehicles. These minerals are a single point of failure in key supply chains. China controls over 80% of global rare earth mineral production. The export ban is inflicting significant pressure on the US economy and national security. Even though rare earth export restriction hurts US, but I think the impact is not immediate enough for Trump to make the policy U-turn. This isn't the first time China used this tactic. In 2010, during the dispute with Japan over islands, China did the same thing to Japan. In response, Japan diversified its rare earth supply. But that was less severe than today. They didn't cut off entirely the export to Japan. In response, Japan diversified its rare earth supply, reducing dependency on China from 90% to 60% by 2023. So this precedent actually showed the world how China might use rare earth as a leverage, and the US should have anticipated this. Rare earth export ban hurts, but the effect is not immediate. What's immediate is the pain US consumer is about to face. CEOs of Walmart, Target, Home Depot warned Trump privately on Tuesday. They said tariff will disrupt supply chains, raise prices, and empty shelves. Effects are expected to become visible within 2 weeks. Retailers can't import Chinese goods at previous low price. Rising prices would contradict with Trump's recent claim of so-called no inflation. He was just pressuring Powell to cut rate a couple days ago. Last instance of empty shelves in America was during COVID-19, caused by the panic buying. But today, retailers are facing empty shelves due to Trump's unpredictable tariff policies. Trump flip-flops between raising tariffs sharply and hinting at lowering them soon. And even the Treasury Secretary also acknowledged the current tariff level on China are unsustainable and may be cut in weeks. So China has not blocked the exports of goods to US. It is US government that's imposing the tariff on Chinese imports. So the goods can still be purchased. They're just heavily taxed by the federal government. But the retailers are hesitant to place an order now because they fear the tariff will drop shortly, leading to a loss. So the core issue here is that the policy uncertainty is making it risky to commit to any Chinese purchase today, delaying imports. Besides brick-and-mortar retailers, e-commerce will be hit badly as well. 70% of the sellers on Amazon have sourced their goods from China. Having empty shelves would erode public trust in government, increase public anxiety, and in extreme cases, trigger riots. Besides this immediate threat to social stability, airlines like American, Southwest, Alaska Air Group are reporting softer leisure travel demand. These airlines pulled their full-year outlook due to economic uncertainties. Flight booking from Canada to US for the month between April and September are down over 70% year over year. This is largely due to Trump's controversial rhetoric. Procter & Gamble, the largest US consumer goods company, warned it may raise prices. Auto manufacturers like GM, Volkswagen, and Toyota urged Trump to reconsider the 25% tariff on car parts set for May 3rd, citing increased costs for buying and repairing vehicles. So maybe the auto companies need to be agile, like what Apple is doing. Apple is shifting its iPhone assembly line from China to India to reduce risks. The goal for Apple is to have India as a larger iPhone assembler than China by end of 2026, where 80 million iPhones per year are expected to be assembled. So maybe automakers should try harder to manufacture auto parts in North America so it can be protected under the USMCA. Another thing Trump is keeping an eye on is his approval rate. So Trump's disapproval rate has risen to 52%. His approval rate has dropped to 44%. So the disapproval rate is 8% higher than the approval rate. If you compare this with Biden, this is worse than Biden. So on the 95th day into the office, Biden had approval rate 15% higher than the disapproval rate. But if you compare this to Trump's first term, it's looking okay. He's actually doing slightly better. During the same time period in his first term, his disapproval rate was 11% higher than the approval rate. So what does US really want to achieve by having this trade war with China? On Wednesday, US Treasury Secretary Bessent spoke at IIF Global Outlook Forum. In his prepared remark, he emphasized that China is in need of rebalancing. He noted that recent data shows the Chinese economy shifting further away from consumption and towards manufacturing, and China's growth is heavily reliant on manufacturing exports, which is creating growth imbalance with its trading partners. This export-driven model is unsustainable and is hurting not only China but also the global economy. Bessent stressed that China needs to change its economic model. China is aware of this need, and so is the international community. The US is willing to assist in this transition, highlighting that global rebalancing is a shared need. So the reason why Bessent said China is aware of this is because this is actually China's current strategy, which is called dual circulation, where the strategy was introduced by Xi Jinping in May of 2020, focuses on strengthening domestic consumption and innovation. So pretty much the internal circulation needs to be strengthened and maintains engagement with global market. So there is that external circulation. So China is aiming to reduce reliance on exports and global market and global consumers. And the US similarly wants to cut import from China and boost its domestic US manufacturing. So both countries are sharing the same goals by increasing self-reliance on production and consumption. So despite the aligned goals, the two countries are at a severe trade war, almost decoupling from each other. Because China wants a gradual transition from the external circulation into the internal circulation to avoid disruption in manufacturing. If the shift is happening too rapidly, it would force export-focused factories to compete against domestic-focused factories, which would lead to overcapacity, factory bankruptcies, and job losses. But that's not what Trump wants, because he can only stay in the office for 4 years. He wants this to happen quickly. Now, what's the way forward? How does the two countries de-escalate? So both countries are actually locked in a standoff, waiting for the other country to make the first concession. Trump has publicly urged Xi to call him, but China demanded the US to cancel all unilateral tariffs before they can start talking. So each side are expecting the other side to make the move first. The US and China are like two kids who had an argument in the playground. Both feel wronged, and they're not talking. Arms crossed, staring in the opposite direction. But deep down, both know they need each other. They need to be friends and they need to play together. But the trouble is, each one is waiting for the other to apologize first.